Joining us now is Kimon Boyatjies from Trident Asset Management, still with me in studio, Wayne McCurry. Kimon, a very good evening to you. And as a fellow Greek, I'd like to get a sense from you whether you think Greece is going to default, whether you think Greece should default, and what kind of impact it's going to have on us here in South Africa.
I do think that the likelihood of them repaying back debt over time is minuscule. I can't really see it happening. One of the reasons why the major players in Europe don't want to default is because it would impact their banks so negatively right now that it really would have an adverse effect on the economy and on the market. So I think they're trying to keep Greece alive for the time being, but I really don't know if that lifeline is going to be sustainable, and I don't know if it's really going to go forward much longer than now. I think what they're waiting to do is shore up their banks, ensure that there's enough capital in the banks to withstand a default, because particularly France and Germany are holding huge amounts of Greek debt. And once they've managed to shore up those banks, then I can't see why they won't let Greece go. I think they might just. The negative side of that is that it obviously would have a knock-on effect on countries like Italy, Portugal, and in particular Spain, which they look pretty tenuous at best. So I think one of the reasons that they would not like to see Greece go right now or in the immediate future is because of that knock-on domino effect.
So, Kimon, I can then assume that you are positioning yourself for a possible default down the line and contagion. So, in other words, I know that you are quite a big fan of gold and inflation-linked bonds at this point. So, I'm sure, you, as I said, you're positioning yourself for some kind of drama to play out.
Well, you know, I think the markets are going to be extremely volatile. I don't think that this volatility is going away anytime soon. I think we will have moments of recovery. Markets are pretty oversold right now, particularly equities. But at the same time, for me, the secret in any kind of asset management is in good diversification and holding all asset classes. Sadly, I think in South Africa, on balance, asset allocation is poor at best. And I'm very critical of that. I think the advisors have got so much of a focus on equities that it doesn't do any portfolio much good. I think the secret in preserving capital and, in fact, in making money is ensuring that you've got a good diversification within all the different asset classes. Talking about inflation-linked bonds, you know that we've been advocating a 20% allocation to those. They are still under-owned. I think they're one of the finest instruments with trying to achieve an objective, and I'm sure Wayne will agree that when one looks at any objective for a portfolio is to ensure that you beat inflation over time. And the instrument that closest aligns itself to the outcome are inflation-linked bonds.
Now, I must say, Kimon, I agree with that. The problem with inflation-linked bonds is they're not sexy, and no one likes them. But are they good instruments for the longer term? Look, I don't think you're going to get much joy out of them in the next year or so, I wouldn't think. But as a longer-term investment, specifically in the developed markets, I think they're an excellent way to put your money. In fact, in my view, if you could only make one decision now that's got to last you the next 10 years in buying a US-related asset, I would buy a US inflation-linked bond, because I think that's crazy to buy gilts in the US. You'd probably be okay buying shares in the US, but the inflation-linked is, in fact, the way to go. What's your view of the valuation of our share market? Because on the face of it, it doesn't look terribly expensive.
No, I'm so happy what you said about inflation-linked bonds, particularly in the US, and I agree with you when it comes to their bond market. I really would have the lowest weighting possible in US treasuries, particularly because I've got a negative outlook on dollar anyway. And aside from the fact that the yields are so low that they don't warrant the kind of risk that you would have by being long of those. In terms of the valuation of our market in general, I think it's not too demanding. I think there are pockets of value. I really do think that one should look towards shares like BATS, for example, which I love BATS, and maybe one or two of the telco shares where you've got a decent dividend growth. In absolute terms, I think the dividends are quite stellar, and the prospect of those companies in the short to medium term coming under any kind of pressure are I wouldn't say remote, but they're quite small. So I'd have great level of comfort in holding those kind of shares. Internationally, I've been advocating shares like Nestlé. Again, good dividend payers. It's in a good currency. It's in Swiss franc. And I think, yeah, those are the kind of shares that I'll be looking at. In general, our market is not expensive. I do think it's subject to the volatilities of global markets, and one must be fully cognizant of that. And I've been advocating a 40 to 45% holding in equities locally.
Kimon, we had a caller a short while ago asking the question when to buy and sell gold shares and also construction. I know construction, I'm sure you don't actually have exposures to, if I'm not mistaken. I know that you have quite a strong holding in gold, physical exposure. What about the gold mining shares?
Gold mining shares, we've only had one share in our portfolio, and that's Gold Fields. It's performed well of late. It's been extremely volatile. We got in at about 104 Rand. It went to 125, went back to 104, but we've held it throughout. Today, I think it was in the region of about 135. There are exceptions to the rule. We don't really like Harmony. We think there's too much risk there. One of the big asset managers locally has been buying that stock. We just can't see why and don't understand the value there. But I think with Gold Fields, one of the things that we do like is that not all of its earnings come from South Africa. And I think one must always be cognizant of that when one's doing asset allocation, particularly internationally. We can get exposure to certain international shares where the majority of their earnings are offshore. We can get them through our own markets. So I think when one looks at asset allocation, one must be fully cognizant of that. For example, your Richemonts, your BATs, those are the kind of shares that we're talking about.
Now, Kimon, when you look at overseas share markets, do you see, despite all the trouble in Europe, do you see good value in the European market in comparison to the US share market, or do you view them much the same?
No, I think we see in Europe, their market's really been hit quite hard. I do think if one looks at it, one of the things I always do is look at currencies as well. I think it's very important if one is looking to enter into, for example, the US market or the European market, have a look at what your expectations are for that currency. And if the currency is going to be depreciating by a greater level than what the shares will be appreciating in one's analytical view, then don't buy them. So I think what we look for is there going to be stability in a currency? As I said, we've always liked, for the past couple of years, Swiss francs, and are therefore perhaps much more comfortable owning those kind of shares. If I look at the US and Europe, I think they're plagued with similar problems. Right now the focus is on Europe, and probably what we'll find, at least in the short term, that the dollar will outperform the euro. I don't know if that's going to be a long-term play, we'll see. But because of that, I'd be more inclined in the very short term to possibly preferring exposure to the US.
Let's touch on the Rand also, Kimon, weakening quite extensively relative to what we saw at the beginning of the year, but in the greater scheme of things, we've said this time and time again, it's still quite strong. Are you trying to get exposure or move away from getting Rand exposure at this point in time? We know that some stocks are Rand sensitive. How are you viewing this?
I look at the Rand, we live here. So I think another factor that one should take into consideration for one's portfolio is what kind of fund are you running. So one should really match assets and liabilities. And if the majority of your liabilities are in South Africa, that's where the majority of your assets should be. Why take on any silly risk for a portfolio that has to match its assets and liabilities? Having said that, our view on the Rand is that the Rand will be a better performer than a lot of the international currencies. We tend to pretty closely track the Canadian dollar, Aussie dollar, New Zealand dollar. So those are the currencies that we like, and those are the currencies that we think will continue to outperform some of the majors, at least over the medium term. Yeah. And because of that, we're pretty comfortable with Rand holdings. So one of the important things to be cognizant of when it comes to currencies are actually a relative play. So one currency will appreciate at the expense of others. And I think that's what's very important. And that's why we put an extensive focus on currency whenever we're entering into any particular sector of the international market.
Kimon, we have to leave it there. Thank you so much for joining us. Great to have you on the program.